The top 5 stocks to buy now before the U.S. election. As the U.S. election approaches, the stock market is bound to react to the political climate. Here's a quirky twist on how stocks perform before the U.S. elections. According to Bankrate, the S&P 500 index has played a fortune teller, accurately predicting the winner in 20 of the last 24 U.S. presidential elections since 1936. Talk about stocks having their finger on the political pulse. When the S&P 500 rises 3 months before a presidential election, the incumbent party tends to win. Conversely, if the S&P 500 declines during that same period, the incumbent party tends to lose. However, it's important to note that this is a correlation and not necessarily a causation, as many factors influence both stock market performance and election outcomes. But here's the good news. Some stocks have the potential to perform well no matter the election outcome. You may be looking for growth, income, or long-term stability. It's important to make smart investment decisions now. In today's video, I'll be sharing the top 5 stocks you should consider buying before the U.S. election. These stocks have strong fundamentals, resilient business models, and the potential to thrive in any market condition. Plus, they're positioned across various sectors, giving your portfolio balance and growth potential. Stick around until the end for some extra insights that could help you pick the best stocks for the long term. Ready to take action before the election shakes things up? Let's dive into the 5 top stocks you should be looking at right now. Goldman Sachs, NYSE, GS is one of the most well-known names on Wall Street, and the numbers back up why it's still a top pick. Shares of Goldman Sachs are up 2.48% over the past week, outperforming the Zacks financial investment bank industry, which is up just 0.87%. But the longer-term picture is even more impressive. Over the past month, Goldman Sachs shares have increased by 7.38%, while the industry has only risen 1.63%. Looking at the bigger picture, Goldman Sachs has outpaced the broader market, with its stock rising 14.03% in the past quarter and an impressive 33.99% in the last year. For comparison, the S&P 500 has only moved 3.78% and 27.1% over the same periods. Another key factor for investors is Goldman Sachs' average 20-day trading volume, which is currently at 2,635,439 shares. Rising volume alongside a rising stock price is typically a bullish signal, and with a momentum score of A from Zacks, Goldman Sachs is in a strong position for continued growth. If you're looking for a fresh pick that's set to soar in the near term, keep Goldman Sachs on your shortlist. Let's shift gears to insurance, an industry that remains essential in any political environment. Next up is Progressive Corp, NYSE PGR, an insurance company that has been one of the most searched-for stocks on Zacks.com lately, and for good reason. Over the past month, Progressive has returned an impressive plus 17.6%, far outpacing the S&P 500 composites plus 3.4% change. Even within its industry, Progressive shines, as the Zacks insurance, property, and casualty sector has only gained 11.3% over the same period. So what's driving this performance? Progressive's strong underwriting practices and a well-established position in the insurance industry make it a stable, long-term investment. The company is expected to post earnings of $2.77 per share for the current quarter, a 32.5% year-over-year improvement. Insurance is a necessity, and Progressive's ability to manage risk and grow its market share makes it a reliable stock pick in the lead-up to the U.S. election. From insurance, let's now move to defense, an industry that thrives regardless of which political party is in power. General Dynamics, NYSE GD, is a leading defense contractor, and with consistent government defense spending, it's a stable stock to own before the U.S. election. Out of 15 Wall Street analysts, 9 recommend General Dynamics as a strong buy. As of September 10, 2024, General Dynamics boasts a market capitalization of $82.9 billion, placing it in the 98th percentile of companies within the aerospace and defense industry. The company's price-to-earnings ratio is 23.6, and it has delivered impressive results, with trailing 12-month revenue of $44.9 billion and a profit margin of 7.9%. Year over year, General Dynamics has seen 18% quarterly sales growth, and analysts expect adjusted earnings of $14.519 per share for this fiscal year. The company also offers a 1.9% dividend yield, making it an attractive pick for both growth and income. Defense spending is expected to remain strong, with bipartisan support for initiatives that maintain the US's military dominance in sea, air, and space. The demand for defense contracts will likely continue to grow, providing General Dynamics with stable revenue, no matter the election outcome. Let's dive into the world of tech, where Nvidia is leading the charge. Nvidia, NASDAQ, NVDA, is a leader in artificial intelligence and tech innovation, and despite a recent stock decline, it remains one of the top choices for long-term growth. Shares of Nvidia are down after an impressive second quarter earnings report, where the company posted record revenue growth of 122.4% year over year, reaching $30.04 billion. So why has Nvidia's stock dropped? The market's expectations were simply too high. But here's the good news. This pullback presents a buying opportunity for long-term investors. Nvidia's fundamentals are as strong as ever, with data center revenue up 154% year over year, and the company leading the way in AI technology. Nvidia's outlook remains bright. It has provided strong third-quarter guidance, with expectations of $31.85 to $33.15 billion in revenue, reflecting an 80% year-over-year increase. Plus, with its cutting-edge Blackwell AI chips set to roll out in 2025, Nvidia is poised to continue its dominance in the AI space. The recent sell-off provides an entry point for investors looking to capitalize on the future of AI and tech. Bottom line, Nvidia remains a top stock pick before the U.S. election, and its leadership in AI will likely drive future growth for years to come. Last on our list, let's turn our attention to the consumer sector. Lululemon, NASDAQ, LULU, is a major player in the consumer discretionary sector. Although its stock price has taken a hit recently, down over 50% this year, it's still one of the top growth stocks to consider before the election. Here's why. Despite the stock's decline, Lululemon's revenue and profits have grown significantly over the past 5 years. In fact, revenue has more than doubled, rising from $4 billion to $9.8 billion. And profits have grown from $645 million to $1.6 billion. This shows that Lululemon's fundamentals are strong, even if its stock price hasn't kept up. What's more, analysts are optimistic about Lululemon's future. They project earnings per share, EPS growth of 25% in the first year, followed by steady growth in the years to come. This makes Lululemon a potential value play, especially considering its current stock price of $238. If you're looking for a high-growth stock in the consumer sector, Lululemon could be a great choice, offering both long-term growth and a chance to buy the dip. So having highlighted the top 5 stocks to consider before the election, let's wrap up with some key takeaways. While these 5 stocks are solid choices, it's important to remember that the market can be unpredictable, especially around election time. Here are a few factors to keep in mind as you prepare your portfolio for the U.S. election. Volatility. The market often becomes more volatile leading up to an election, so be prepared for price swings. Stocks with strong fundamentals and consistent revenue are more likely to weather the storm. Sector performance. Some sectors like defense and healthcare tend to perform well regardless of political outcomes. Diversifying your portfolio with stocks from different industries can help balance risk. Long-term outlook. Remember that elections come and go, but long-term investment strategies should focus on consistent growth and solid fundamentals. These 5 stocks have proven their ability to perform over the long term, making them great options no matter who wins. The key to successful investing during uncertain times is to focus on the long term. The U.S. election may cause short-term volatility, but these stocks are positioned for growth beyond the election season. If you found this video helpful, Please give it a thumbs up and hit the subscribe button for more investment tips. Let me know in the comments which stock you're most excited about, and I'll see you in the next video. Your financial future is waiting.